spent the first 10 years of my career as a veterinarian, which is why I know rebels like Alex at the back there. And the last kind of 15 years working in impact investing. And impact investing is investing where you're looking for a financial as well as a social or environmental return. And really my role has been to help both the development and the finance sectors speak to each other, speak the same language, build business models that can attract funding and educate investors as to how they can allocate capital better. And so that's the lens that I bring to my research question, which is about the role of public and private investment in establishing, expanding, and really sustaining wildlife ranches in the region, with a focus on South Africa, Namibia, Botswana, maybe Namibia. The research, it's really rooted in the larger kind of macro system around expanding 30 by 30, but also this target around ecosystem restoration. There's an equivalent target of restoring 30% of land. And I think, you know, in this group, we've talked about the spectrum of intensity of land use, particularly, you know, within wildlife-based land use systems, and how all of our intent, you know, regardless of where we sit along the spectrum, is to move a little bit closer to impact, whatever that might look like. And financial systems can support that shift, be it through sustainable productive landscapes or protected areas. So when I had a look at the literature, most of which is, I think, written by environmental economists and conservation scientists, I was looking at it, or trying to look at it, with the lens of an investor. And really they have a very simple paradigm: risk, return, and some of them look at impact. And the literature is really strong around impact. So the ecological returns, let's say, is relatively well established. We've talked about it in depth, and it particularly pertains to the abundance and diversity of species. Very importantly, that is linked to habitat. So, you know, that is linked to how much space these mammals have. And there's an established link between the presence of large mammals and human impacts on ecosystems. So that is well documented and underutilized. When it comes to socioeconomic development, and we're thinking about these models, and maybe there's definitely a distinction between private and communal models. There are different socioeconomic impacts accruing from these various models, and being distributed in different ways, but mainly we are capturing them as far as revenue and jobs are concerned. And that's important, because if you're going to attract public funding or overseas development assistance, which comes from international taxpayers, you need to be able to tell that story compellingly as well. The business case, again, over the last 30 years, there's a wealth of information around profitability of these businesses. This obviously ties into investor returns. Even though it's over quite a significant period of time, the information is relatively consistent. The profitability is low, generally below 5%, and in line with other extensive farming systems. In fact, most historical literature will tell us that it's more profitable than livestock in these similar kind of arid areas. Although I think, after having conversations with Barry, there's this real danger around the cost of doing business at the moment, particularly in maybe more established markets, that hasn't been factored into these prices, or this return on investment data. But we've got some kind of fluctuations around when time bound, size, business model, kind of level of aggregation, but in general we have reasonably well established return data. There definitely is a reflection on risk. You can't have kind of return without risk in an investor's mind. Again, we've gone into that in quite a lot of detail in this group. We've talked about regulation being quite a massive, having quite a huge influence around risk levels and tenure, especially wildlife user rights and ownership rights, and not just whether they exist or not or what systems are there, but the level of certainty that's associated with them, because a lot of these investments are 5, 10, 20-year investments. And if these regulations fluctuate significantly, it cuts out quite a significant part of the investor market. There's also other risks associated with demand. We talked about trophy hunting bans and reducing markets around offtake. So that's also comes under consideration. All right. What else did I want to say? So there are some early insights that I want to share. I don't know how much time I have left. 3 minutes. Okay. And these insights really come from chatting to some key informants in the market. None of them are going to be huge revelations to you in the next few months. I'm going to be kind of building out a framework and trying to understand how this kind of information is communicated relative to some sort of typology, because not one size fits all across this spectrum. But I think what I've certainly heard is that this impact premium has yet to be kind of baked into the cost of capital in this market. And what does that mean? That the capital that's entering the market, the majority from third parties, is still really chasing a risk-adjusted return. And there are many innovative ways, and I think it was brought up in the last session, that we can start to kind of fundamentally shift how funders across the spectrum then think about allocating. There's not really much data on who's supplying this capital in published data. There's a lot of anecdotal data about it. And I think certainly within the private space, a lot of it is coming from private individuals. They're either self-financing through conversion from other agricultural endeavors, or it's been cross-subsidized through other businesses. So they're pouring it really into their wildlife ranches, and they're making it elsewhere. Some evidence of lending, but anecdotally, most of that being done on the back of maybe kind of personal collateral rather than on the business model itself, which remains there remains a lack of understanding, certainly within the banking sector, even with the likes of ABSA, who produced those really kind of excellent profitability booklets. Well, it's probably almost a decade ago. There are obviously governments fragmented. You've got stories around syndicates, particularly when game prices are high. So basically what I'm saying is that there's kind of a lack of aggregated data around the source of funding that's coming in, the terms of that funding, the sustainability of that funding. And that's part of what I'm going to try and understand. So how's the established market funded itself into existence? And to some extent, try and extrapolate how those lessons can be applied to what is likely to be quite a different further expansion. I don't think necessarily relying on kind of high net individuals to come in and cross-subsidize is something that is realistic. And if this is going to be inclusive and more widespread, then we have to think about how to start integrating what's happening in other sectors and those kinds of models into what's happening across our landscapes. Another maybe thing to note that has come out quite strongly in conversations is this idea of taking landscape approaches or maybe conservancy approaches as they might look in other areas or transfrontier conservation areas. So, what are the leveraging effects of concessionary funding at a system level that can unlock further private financing. James from Rewilding, has a model. Sandparks has a model. And I think these are, particularly strong regional models where I think we can highlight these kind of success stories, these regional success stories, to be able to show them to the rest of the globe. Certainly with the idea of raising additional funding to start pushing these things through at scale. And that's me. Thank you.